Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is February 3rd, 2026, and on this episode, I'm thrilled to welcome Steve Penny to the show, the founder of Silver Chartist, a premium technical analysis service that covers silver, uranium, gold, platinum, and energy. With silver's smash on the final trading day of last week behind us and the metal starting to recover, when will we get back to triple digits? Steve lays out his thoughts and explains why he thinks a $500 silver price lies ahead, waiting to be seized by speculators with a stomach for volatility and the conviction to hold through the storm ahead. Steve also dives into his approach to investing in silver miners, why platinum could be the new silver, his bullish outlook for uranium in 2026, and so much more, so strap yourselves in for my conversation with Steve Penny. Steve Penny, it is great to have you back on Commodity Culture. I want to kick things off, of course, with action in the silver market. Last week, Friday, we saw the metal drop nauseating 26% in a single trading day. Gold also tumbling around 9% on the day. Platinum also selling off. Very interesting day indeed. And of course, yesterday, Monday, starting off this week, the metals continued to fall. They seem to be staging a rally today. But from the peak, silver fell from around $117. We're sitting at around $84 as we speak at the moment. If you could speculate for us, what do you think was behind this massive sell-off in the metals?
Yeah, I think it was a combination of factors, but conditions were ripe for a healthy pullback. So we were getting a bit long in the tooth in this particular move. I think ultimately we're going much higher. So some profit taking is normal. However, we saw a confluence of things start to begin to happen last Friday. Number one was the CME raising margin requirements. And then, of course, they announced the new incoming Federal Reserve Chairman, Kevin Warsh, who is dubbed as a inflation hawk, Fed critic. The dollar bounced. And these things kind of combined to be a catalyst for a pullback in the metals. And of course, I think there was just some normal profit taking plus some nudging by the commercial bankers who are still net short futures contracts in silver, especially the European banks. So I think they gave it a nudge. That all combined for a massive decline. We peaked on Thursday morning on the futures price at 121.73 and bottomed at $74. Interestingly, that's a 40% pullback. And I've been saying that I think this moment we're in right now, this kind of big move we're having, is analogous to the 1974 run from 1971 to 1974, where silver went up like 400% in 27 months, and then we're due for a pullback. So I think we're having that 1974 moment. And interestingly, in 1974, when silver did pull back, it pulled back from $6.70 down to about $4, an equal 40% move. So we're 40% off the highs. 1974, 40% off the high. So I think that's kind of a good comparison to where we are now. I'm looking for a base to form. Ultimately, I think we still have our 1979 moment ahead where we go up, quite higher.
So when it comes to, obviously, the question out there everybody's asking is, when are we getting back to triple digits? People love to talk about these big round numbers. And in fact, throughout 2025, when the thought of, or the idea of triple digit silver came up on this show, it was largely mocked. Most people thought it wasn't possible. It was a pipe dream. And we ran there perhaps too far, too fast. I wonder what your thoughts are there. Do you think that we get back to triple digits in short order by the end of the year? What's your thoughts there?
Yeah, you're so right. I mean, even just a few months ago, talking about triple digit silver seemed like a far-fetched kind of, idea. And I remember the first time you had me on, or the last time we spoke, I should say, was the day after Thanksgiving when silver broke through $54. And that was the key that unlocked our next measured move target of 96. So that was my target. Admittedly, we got there faster than I had anticipated. So rather than kind of predict how soon we're going to get back to triple digit silver, what I like to do is assess the spectrum of plausible short-term outcomes here, from most bearish to most bullish, and then assign probabilities to each. So just roughly speaking, and a little bit admittedly subjective, I think there's roughly a 40% probability that we get kind of a dead cat bounce here and then make a slightly lower low. And that would be our ideal buying opportunity, something down into the mid 60s. Admittedly subjective, about 40% probability that happens. I think probably equal probability, about 40%, is that we consolidate. That yesterday's low around $71 on the futures price might have been the low, and we kind of form out some kind of pattern, maybe a triangle or something like that, a consolidation pattern for a few months before punching higher and taking out that previous high of 121 and change. And then I think less likely, but possible, within that spectrum of plausible short-term outcomes is about a 20% chance that we take out the new highs quickly within the next few weeks. And that would be the buy signal. Just like I thought we would consolidate, going back to last October, for a little bit. Well, we broke out earlier than planned, and the break above 54 was the buy signal. In a similar way, I think a break above 121 would be another buy signal. So I think 20% chance that we just go straight back to triple digits and go and take out new highs.
And what is your target that when you'll be looking to sell or at least start taking profits from your position when it comes to the physical and any proxies for that, whether that's, I don't know if you trade in SLV or PSLV, any of these paper ETFs that have physical backing. I mean, PSLV is obviously much more reliable when it comes to knowing that the metals are there. But your overall thoughts on just when you would be taking profits? Are you taking profits along the way? Do you scale out of that position? And a follow-up, I know this is a long question, but in terms of physical silver, I speak to a lot of people who say they'll never sell their physical, that's their insurance policy. Are you of that mind, or do you think there'll come a time when it's time to sell everything in the physical realm?
I love this question, and I love it because I don't think there's an absolute right or wrong answer, but I think it's a question that every single person listening to this interview should ask themselves. What is your plan to push the sell button? Do you have a plan? Because having a plan sets you apart from 90% of the other traders and speculators and investors out there. So I don't think there's a right or wrong. So here's how I do it. I've got a portion that I have set aside as a generational insurance policy against these out of control central planners. This is the biggest global debt binge in all of history. And we know that fiat currencies, debt-based fiat currencies, always return to their intrinsic value, which is zero. And we're on that trajectory. So there's some that I never plan to sell. Now I've got some earmarked based on ratios that I plan to swap. There will come a time where silver and gold are overvalued and more conventional things are undervalued. So I look forward to swapping some silver and gold for passive income in the form of blue chip dividend stocks, water ETFs, and even real estate when the time comes based on ratios. And then I've got my paper speculative positions where I'm quicker to push the sell button. So I've determined ahead of time. I think silver is very likely to ultimately, not necessarily even this year, but ultimately go to $500 an ounce. But in my speculative positions, I've decided to control greed, $300 is enough for me. That'll be life-changing. So I plan to have exited all of my speculative paper positions by the time we get to $300 silver. And I do kind of dance in and out a little bit. For example, last week, we issued alerts to our members that on Monday and then Wednesday, when silver got up to like 119, 120, I did sell 75% of my PSLV. And, I didn't know that there was going to be a 40% drop over the next, 24 hours, but I knew conditions were ripe. The risk reward ratio over the short term was diminishing. So in those paper accounts, I give myself permission to kind of sell when things get way overbought in the short term and then scale back in. So that's kind of how I handle it. That doesn't mean it's right for everyone, but I think everyone should have a plan and a profit-taking strategy for sure.
Yeah, I like that multifaceted approach. I want to point out one curious aspect about the sell-off in silver on Friday, which is that the COMEX is supposed to have a circuit breaker that halts trading if silver rises or drops, or any asset rises or drops 10% or more on a rolling 1-hour basis. It looks like silver did indeed at one point drop more than 10% within a 1-hour period. David Jensen pointed this out in one of his recent Substack articles, and yet the breaker was never triggered. Is this what you've concluded as well? And if that's true, does that make the COMEX itself potentially implicit in price suppression?
Yeah, I think there's a nuanced answer there. So first of all, I'm highly skeptical of the COMEX and the CME and all of our official institutions. I'll be the first to, in my mind, they're kind of guilty until proven innocent. And I think their track record over the past 10 plus years of me tracking them deserves that. However, I think there's some nuance in this particular case. So there is no blanket 10% rule, quote unquote, for futures contracts. And I want to give credit where it's due. Eric Townsend on X did a nice response to someone on this, and he's very experienced future traders. So each separate contract, for example, wheat, copper, crude oil, gold, has its own contract specifications. So there's not a specific 10% circuit breaker for silver, but it does have, the silver specific contract does have what's called a dynamic circuit breaker under Rule 589. And what that rule says is that there should be a 2-minute halt whenever there's a plus or minus 10% move within a 60-minute look back window. So there should have been a 2-minute halt. And there was a moment, I believe, let me see, I've got a screenshot here from 12:36 p.m. to 1:36 p.m. So there was a 1 hour look back window where silver dropped from $90 to $74 on the futures price. So they should have had that 2 minute circuit breaker triggered. I don't know why it didn't, but to be honest, I'm not sure that a 2 minute halt would have really changed anything. So while I'm usually quick to assign blame, to these, the CME or the COMEX, in this particular case, I'm not sure it made that much of a difference. But I know it's getting a lot of attention on social media. So that's my take on that.
The sponsor of today's episode is ARK Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arksgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. Now, when it comes to those who maybe don't have a position in silver or who are newer to the space and maybe have built a moderate position and would like to add more, is this a buy the dip opportunity in your view? Obviously, we don't give financial advice here, but just in your opinion, the way that you're approaching it. And I'd love your thoughts on not only the metal, but the miners as well, because those have not provided that levered play on silver that people were expecting. In fact, as we closed out 2025 and went into 2026, at one point on a percentage gain basis, the metal itself was outperforming the SIL ETF, which seems to be rather unusual. What are your thoughts there? Are you looking for entry positions at this point? Are you on the sidelines, observing for potential further drawdowns? Are you dollar cost averaging? Maybe all the above, given your multifaceted approach here.
Sure. Yeah. Another great question. Love this one. So I'll give some food for thought and then I'll tell you specifically what I'm doing. Not that that means everyone should do what I'm doing, but I think some food for thought is I think I gave our Silver Chartist members kind of an assignment and say, hey, you should go back and think, what is your desired target weight allocation for each of our focus sectors? So in this case, precious metals. Decide for yourself. There's not a right or wrong, but decide how much exposure to your liquid net worth do you want in precious metals. So for me, I like 35%. Now, there may be times where I'm willing to go overweight when conditions are ripe. Now, when would I want to go overweight? When the price is up here or down here, when the price is way low. So to me, 35% is my desired target weight allocation. So decide, what is it for you? And if right now you are under your target weight allocation, well, this could be an opportunity to scale back in at much more favorable entry points. If you're already over your target weight allocation, well, then probably the best course of action is just to sit on your hands and do nothing and wait for the bull market to resume. So that's just a question that I think everyone should ask themselves. So what am I doing? Because we took profits and we've got that multifaceted approach, like you said, in our speculative bucket, we took big profits. So now I'm sitting on much more cash than normal. So I am redeploying that. And on Friday, we had that cash and we scooped up some bargains in some blue chip silver miners and silver stocks, specifically like wheat and precious metals. I'll name one, SIL, the SIL ETF. So I'm nibbling here, but I'm not going all in because there's still that potential for a lower low. I like to make if-then statements. So if silver dips towards 65, that's where I plan to buy even more aggressively. Any dips towards the intraday low of 71 from yesterday, well, I'm going to buy a little bit less aggressively, but nibble and just scale in slowly on weakness. That's how I'm approaching it. And this isn't for everyone, but options tend to be really confusing and perceived as very risky. But one thing I like to do, and options can be risky for options buyers, but I like to sell puts. So it's a really unique strategy we use is you can actually get paid to buy a stock or ETF that you like at a lower price. And, you can make a few $100s per contract by obligating yourself to buy it at a lower price, and it generates income. So we're kind of selling puts on SIL and some other top tier names as well. So that's how I'm handling it. And hopefully that gives your listeners something to think about.
And when it comes to the silver mining space, where do you see the most value at present? Is it in the larger producers, your Pan American Silvers, royalty streaming, your wheat and precious? Do you look at the developers and explorers at all? Do you go further out on that risk spectrum? And how do you position size? Are you keeping your larger positions in more of the larger caps and the ETFs and perhaps speculating with smaller amounts of capital? Would love to hear your strategy there.
Yeah, in general, one of my principles, and I think this saying comes from David Morgan: big money in big names, small money in small names. That's kind of a principle I adhere to. But I think I don't touch the explorers and developers anymore. That requires a very specific skill set that I, to be honest with you, don't have. So where I think probably the most value right now is in mid-tier producers with exploration upside. You still get that torque, that potential upside of new discoveries and new production coming online, while minimizing the dilution risk and all the risks that come along with these explorers and developers. So mid-tier producers with exploration upside, a lot of stocks that fit those characteristics are in the SILJ, Junior Silver Mining ETF. So I like that particular vehicle. And when you look at a ratio chart of, you break down the whole precious metals complex between, physical silver, physical gold, senior gold miners, senior silver miners, and junior gold miners, it's the junior silver miners that are the most undervalued component of the whole sector right now. So I think that's where the most value is. And if we do resume that uptrend pretty soon, I think they are due for a rapid catch-up move. In fact, on the day of the low last Friday, that junior silver miner ETF relative to silver, it's a ratio chart I looked at, hit just pretty close, right about its all-time low. So in other words, like, silver mining stocks have never been cheaper when priced in actual silver. Yeah, they've moved really well, but they've been underperforming silver. Even today, silver's up like 10, 11%, and SILJ is up, less than that. It's up. So I think that's where the value is.
Very interesting. I want to take a step back and get into the weeds a little bit when it comes to the macro fundamentals for silver and gold. I had Gary Savage on the show a few weeks back. He said he thinks we're in the final stages of a secular bull market for gold and silver. He thinks maybe we have 1 or 2 more years left before we see that blow off top and that mania phase, and it'll be time to not only take profits, but completely divest yourself of all physical metals, which is an interesting topic of conversation, because people are very averse to that, especially in the gold and silver stacking community. In fact, the amount of vitriol and hate that Gary received in the comments exceeds anything I've ever seen on my program before. It was like the most downvoted episode I've ever had on my channel, and it was almost like a frenzy in the comments. People were, ganging up, teaming up to attack Gary. This moron doesn't know what he's talking about. Just like ridiculous stuff. And from my perspective, I love hearing people have a contrary opinion to my own. And Gary's a very even-keeled, unemotional, no hyperbole whatsoever. He's also a technical analyst, so he approaches it from that perspective as well as fundamentals. And I think, the truth usually lies in the middle. There's always something you can take from everybody who has expertise in this space. I know you have a bit of a different opinion in terms of the trajectory of this bull market and some of the other ideas he had. So I'd love for you to lay out where you differ and where maybe you agree with him.
Yeah, I love this question. I didn't realize it had stirred up so much vitriol in the comments. I did listen to that interview, and I thought it was very good. And I really like how you framed this question. We're not here to argue with each other. What does that do? I mean, are you going to be mean to someone just because they have a different opinion about silver? I mean, what a stupid thing to argue and be mean to someone about. So I don't know Gary personally. This isn't any personal attack on him, but I do disagree with some key points. And let the free market decide. We'll see. So let him shape your thinking, and then maybe my contrary points, let that shape your thinking as well, and come to your own conclusion. But there's no need to be mean to anyone, for sure. But yeah, so a couple things I disagree with on him is, number one, I think he says silver is not money, and I would strongly disagree with that. I would say there's a key distinction between money and currency. And yes, the dollars in our bank account or in our wallet, those are currency, and those are what you use to purchase things in this day and age. So currency is for spending, but money is for saving. And silver and gold have been money for millennia, and I don't think that's going to change anytime soon. History is riddled with failed attempts to replace silver and gold as money, and none have succeeded so far, and I don't think anything will anytime soon. So primarily, the way I primarily look at silver and gold in my portfolio is not a way to get rich quick, not a way to make a bunch of money and retire early, although there's a role for that. But the primary role of silver and gold in my portfolio is as insurance. This is the biggest global debt binge in all of history, and we already know that all debt-based fiat currencies return to their intrinsic value of zero. And I think conditions are ripe right now. Usually every 40 to 50 years, there's a reordering of the global financial system. That does not have to be as dramatic as it may sound. 1944, we had the Bretton Woods Agreement. Life went on. It's not like society broke down. The dollar became the world's reserve currency. It was tied to gold. Fast forward to 1971, Nixon broke us off of the gold standard, and now, for the first time in all of history, after 1971, all currencies in the entire world are free-floating, debt-based fiat currency. That's never happened before, and we're at a time where this is the biggest global debt binge ever. Fast forward to 1973, the petrodollar system came into effect, thereby changing the rules of the game again. So my point is, conditions are ripe for gold as portfolio insurance. Imagine, you live where there's a place that's prone to fires and you don't have fire insurance, and you kind of see some smoke over the horizon, and you say, you know what? I could sell my insurance policy for a bunch of money right now and translate it into currency. Well, I think that would be akin to selling all of your physical silver and gold right now. So I would certainly not advise. I can't give personal advice, but I have no intention of selling all of my physical in this current environment until things change, regardless of how price silver and gold go. So it's insurance first. So that's one point of distinction, I think, where we disagree. And the other, I know I'm rambling here, but I'll just say one more point, is I think we're in a 1974 moment where I think he might think we're closer to like a 1979 moment where we have the big run up and then the bull market is over. I think we have a period of consolidation, but the big move lies ahead. And I think that will come in response as the Fed's response to the next big panic-driven sell-off. I think we get a big panic-driven sell-off, everything gets hit, and it'll be the Fed's response to that next crisis, whenever it is, that sends silver, to well into the triple digits, gold north of $10,000, and et cetera. So I think that's another point of distinction.
And what do you think the end result is of this debt-based fiat currency system that we've been living under, and the fact that debt and deficits are skyrocketing, government spending is not slowing down. In fact, it's accelerating. And hey, with the release of the Epstein files, and I've always known this, at least for many years, that we are dealing with some very, very evil people. And when I mean evil, I mean that literally. These are evil, demonic people who are in charge of our global monetary system, and they will save themselves to hold on to their own grasp of power in a heartbeat before they'll save the citizens that they claim to represent. So how do you see this all playing out? Are we approaching the end game here where we perhaps could see a catastrophic collapse of the monetary system? If so, what would that look like? And in any way, how, if you can speculate for us, what that end game could potentially look like?
Yeah, another really good question, and I agree wholeheartedly with you. Some people say, "Oh, these central planners are just stupid, like these central bankers and everything." No, I disagree with that at all. I think they're smart, but they're evil, and I think this is all intentional. And I don't think they're stupid at all, like they're just bumbling idiots. I think this is all by design, and I think they're building like a global control grid, if you will, ushering us into some kind of global police state, if you will. There's all kinds of names for it. I call it the B system, if you want. And I think that is a very real risk in the not too distant future. So to me, that's another reason I wouldn't sell my physical silver and gold at any cost, at any price. It could be $1,000 an ounce for silver, not selling all of it. Because let's just say, look at the world around. I don't think it would be dramatic to say, hey, you know what? There's a 10% probability that this world is going to really spiral into chaos, civil unrest, hyperinflation, chaos in the financial markets, supply chains disrupted, perhaps even the electrical grid. 10%, let's just say there's a 10% chance of that. Do you want to sell all your silver and gold? Not that that's even, your ultimate get out of jail free card. That's a part of it, but there's other things you can take. So that's how I look at at this question. Maybe I'm not answering it directly, but a pastor I used to listen to said, there's a distinction between worry and concern. Worry is an unproductive emotion, but concern is when there's something you can do about it. So you can assess the world around you, and then what practical steps can I take to insure against these possible, tail risks. The 10%, hey, there's a 10% chance all this stuff's going to happen. Well, I'm going to get a water filter. I'm going to have a backup generator, maybe get some solar, not big expensive things. Try and have some community around me, just in case those things come to fruition. Where worrying about things that you have no control over is unproductive. So that's kind of how I approach it. Control what I can control, take prudent risk management steps, practical preparedness, in the event that those tail risks do come to fruition. But I agree, these central planners are not stupid. I think they're evil, and they know what they're doing.
Absolutely. I could do a whole episode just on that. I want to focus in on gold for a moment here, because as we mentioned at the top of the program, it also corrected around 9%. Looks like it's recovering, getting back to that $5,000 level, perhaps sooner rather than later. What are your overall thoughts on the trajectory of the gold market? Do you see it as the more stable asset versus silver? given that in many ways, although you argue that silver is money, and I would agree, in our current era, gold is far more recognized for its monetary value than silver. Central bank accumulation, Basel III, talk of gold re-entering the monetary system via BRICS or gold-backed bonds, etc. Do you think that's why gold is holding up a little bit better than silver here? Obviously, it's traditionally a much less volatile asset as well. And just your overall thoughts on the gold market here in 2026.
100%. It's like you're reading my mind because the last week or two, as the gold silver ratio got below 50 to 1, I had been swapping metal that I have in storage. So you can do this with like a couple clicks, is swapping silver for gold. Back in April of last year, we swapped gold for silver and platinum. But now I was swapping a lot of silver back for gold. And I think it's important to focus on, a lot of people focus on total potential return. Yeah, silver's total potential return is greater than that of gold. In fact, I expect the gold silver ratio to continue to compress. But on a risk adjusted basis, as you get sub like 45 to 1 gold silver ratio, the risk reward ratio tends to be a little bit more favorable to gold. Yeah, if the precious metals continue higher, gold's going to go along for the ride, just to a lesser extent. But if we do get these violent pullbacks, gold pulls back for sure, but it doesn't pull back as much. So on the next big deflationary impulse, this next panic-driven sell-off, I think everything is going to get hit, like I said, but I think gold will get hit a lot less. So the way I handle it is, when that gold silver ratio gets below about 45 to 1, that's where I'm become more focused on gold because the risk adjusted returns are a little bit better. So I still have silver, still have gold, but yeah, I think gold, I think it would be a mistake to be just all in silver. I'm going to ride all in silver until we get to, pick your target, $300. I think swapping silver for gold makes a lot of sense. Here's how I think about it too, just as a mental framework. I think about silver for my goal with silver is capital appreciation. My goal with gold is simply capital preservation. I just want it to be a bridge to get me from where we are through the storm to, the other side whenever there is a reordering of the financial system.
And platinum also quietly in its own bull market. What are your thoughts here on the platinum market? Because obviously platinum also getting hit, also recovering, but platinum, most people would point out that it's not traditionally a monetary metal, although perhaps in some parts of the world that could be true. It is more driven by industrial demand, specifically catalytic converters in internal combustion engine vehicles. It's also used in hybrids. However, it's been undervalued for so long and now appears to be it has been breaking out. Do you think the future ahead for platinum is higher prices here? And what are your overall thoughts on the trajectory of that metal?
I do. I think platinum is like silver on steroids. It has higher potential returns than silver, but it's also riskier. It's such a thinly traded market. But you're right. The fundamental backdrop, I think, is very bullish. A lot of people said, oh, EVs are the new, the trend of the future. And, perhaps we're not going to need as much platinum because we're not using catalytic converters. Well, it's looking like, that EV demand is going to wane. And the trend is now going to be more towards just traditional gas hybrids, which actually use more platinum, more palladium. We also see the substitution effect where palladium was more expensive than platinum. It still is. And, you can interchange between platinum and palladium. So I think that substitution effect is happening. Also, hydrogen fuel cell technology is another future potential demand driver for platinum. And then simply investment demand. That's really where I think is going to be the catalyst for the big price move in platinum. It's such a thinly traded market. I mean, it's very small. So it doesn't take many hedge funds, institutions say, hey, I just want a little bit of platinum to really move the price. And, platinum, yes, it's moved really far. However, 2309 was the previous all-time high. So we're really not too far from that right now. Where like silver, broke above 54 and it went up to 120. So it's well above its previous all-time high. Where platinum is just kind of hovering near its previous all-time high of 2309. And you can make a solid case that it's, we could see a rapid catch-up move in platinum.
And the uranium market, my favorite commodity, my favorite market, one that I maybe don't talk about enough on this show because it's actually not that popular of a topic, interestingly, which shows me that perhaps we're still a little bit early here, especially when it comes to the retail crowd. Your average person, if you approach them and talk to them about gold and silver, a lot of people have caught on at least that something's happening in that market. They're aware of it. It's making headlines here and there in the mainstream press. Uranium is so far off the radar despite an incredible performance over the last 5 years and these fundamentals and incredibly powerful tailwinds behind the sector at present. We've seen quite a rise. A lot of people get this misconception that uranium hasn't moved yet. You see it all the time on social media. When's the uranium bull cycle starting? It started in 2020, basically. It's already been going for 5, 6 years. There's been huge appreciation in many of these equities since then. How much farther do you think we have to go in the uranium sector from here?
Yeah, I'm actually, and this might be like what's the word, like treasonous to say amongst silver and gold investors, of which I'm one. But I think I like uranium right here better than I do silver on a risk adjusted return basis. That's actually my
Yes.
favorite sector for 2026. I mean, silver's had a massive move. Yes, I think it's going more, but uranium hasn't had its big move yet. And I've been telling our members at Silver Chartist, let's learn from the past 9 months in silver. Did probably no one really executed everything perfectly. Maybe you wish you trimmed a little more, maybe you wish you held on a little longer. What could you have done differently? And you can take those lessons and apply it to what I think is coming in uranium, because I think uranium is going to have a move similar to silver. So this move that we had in silver can kind of train you and prepare your mind to handle the volatility that's coming in uranium, in my opinion. I mean, it was off to a fantastic start in January. URNJ, the Junior Uranium Miners ETF, at one point it was up 62% just in January. And that's a huge move. It did take out its previous all-time high, but the metal itself, it got up to 101.50 and pulled back a little bit. Now we're in the 90s, but the previous all-time high of uranium is 147 back in 2007, or 148 back in 2007. You adjust that for inflation, that's about $200 using the flawed government statistics. So I think that has a magnet on it, and you could make a valid case, and I think it's true, that the supply-demand situation is more bullish. There's a bigger structural supply deficit going forward than there was in the previous bull market, which was amazing. So I think we're probably going to, I think 148 is the next big target. And then I think $200 and then probably higher from there in uranium.
And do you take a similar approach to the uranium miners as in the silver space? Do you focus on the large producers, the ETFs, the Sprott Physical Uranium Trust, or do you get into the weeds a little bit and look into the developers and the explorers as well?
Yeah, similar to gold, I think everyone should start with a monster box of uranium eagles. I'm just kidding. It's a dumb dad joke, but yeah, no, I do take a similar approach. I like the Sprott Physical Uranium Trust as like a core position that gives you exposure to the physical metal, and then I like to just stick to the ETFs. I do own a couple of individual names, but to me, the URNM ETF and the URNJ ETF are really top tier holdings put out by Sprott, a class act organization. And to me, everyone needs to know your strength, right? So my strength is I've gotten pretty good at kind of timing interim peaks and valleys in the sector. So, if my job is to time the sector, I don't want to track 100 different stocks. I just want to track the 3 ETFs. Now, if you have a skill set where you can go analyze, company earnings and drill results and all this and all the geopolitics that comes along with it, by all means, but that's not my strong suit.
And I'd love to get your thoughts here on the oil and gas sector as well. I noticed that's you mentioned you cover the energy market at Silver Chartist. I think personally it's presenting perhaps one of the greatest contrarian opportunities right now. I wonder what you think, because this is an area that's been beaten up and left for dead. We saw, divestment from institutional investment because it didn't fit ESG narratives or it didn't tick those boxes. It was being vilified. It's going away forever. And now the IEA, which is more of a politically captured organization that pushes a green energy agenda than an actual serious organization that tracks the oil and gas space, even they're coming out and saying, you know what, guys, maybe this peak oil is coming later than we thought. And to begin with, their projections are always incorrect. They always overshoot supply and they always undershoot the demand side, and they have to constantly revise what they're doing. Again, they're pushing a narrative. They're not a legitimate organization, but people still listen to them for some reason. With all of that context in play and the fact that, a lot of analysts out there are saying the big shale oil fields are rolling over, places like the Permian Basin, we're not seeing the production we used to. We need a much higher oil price to incentivize new production, not only there, but in many places around the world. With that backdrop that I've just laid out, how are you viewing the energy sector at present?
Yeah, that's a great backdrop. And I put simply, oil is cheap. And it's cheap, especially when priced in silver and gold. So I've been actually taking a little bit of my profits in silver and gold and rotating them into the energy space. For example, before the big sell-off last Friday, an ounce of silver bought 1.9 barrels of oil. That has never been seen before. You got back to 1980, an ounce of silver could buy 1.5 barrels of oil. And that was the all-time high. So silver buys you a lot more oil than it ever has. Same thing with gold. An ounce of gold will buy you more oil than it ever has before. But there's an interesting kind of dichotomy happening where the blue chip energy names, the Exxon Mobils, the Chevrons, the ConocoPhillips, all the big quality guys, well, they're kind of like breaking out to new all-time highs, at least Exxon and Chevron, where the oil price is way down in the dumps. It had bounced off of this $55 level in oil. It's reclaimed its 200-day moving average. So it looks like oil is trying to turn around, but it's still way down, way low, down in the 60s. So I think a move from just 60 to say 90, that's not anything too dramatic in the price of oil. Could see some of these quality names, energy names, really move higher. And I think there's a long runway ahead. For me personally, I'm nibbling. I'm getting starter positions, but whenever we do get this next big deflationary impulse or panic-driven sell-off, whenever that happens, I'm building opportunity fund capital, and the top-tier energy names are way at the top of my list. And what's really nice about those is they pay a fat dividend, most of them anyway. So you can kind of get paid to wait for your thesis to materialize, unlike silver and gold, where all these years we had to wait, you don't get a dividend. And in fact, a lot of these companies are diluting their shares and all this. So, with the oil and gas space, the good ones, you get a dividend, get paid to wait. Ultimately, I think the oil price has to go a lot higher.
Yeah, and a lot of them pay very generous dividends. They're also buying back shares, and they're also paying off debt. I mean, what more do you want, especially if you're bullish on the future of the commodity itself? Steve, as always, fantastic conversation. Tell us about silverchartist.com and what it is you do there.
Yeah, thanks so much for having me, Jesse. Really appreciate our conversations. You do a great job asking really thought-provoking questions. I learned something listening to your channel every time I listen to one of your interviews, so thanks. Silverchartist.com, fully transparent, over-the-shoulder service, real-time alerts. You see exactly what I'm doing. We're focused on silver, uranium, gold, platinum, and now energy. And I don't claim to get every turn correctly, but you do get full transparency. So you learn from the things I do correctly, and you see my mistakes as well. We've got an awesome community of like-minded people just trying to navigate these markets together. We're there to encourage each other, and appreciate you having me on.
Great. I'll put a link below to silverchartist.com so people can check that out. Thank you once again, Steve, for sharing your knowledge with the audience.
Thanks, brother.
Thank you for joining us today. Our sponsor, ARC Silver Gold Osmium, has some great prices on silver bullion products. You can see them on your screen right now. These are subject to change, and well supplies last, so reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and of course pick up your Stack Silver, not fiat t-shirt. Represent sound money in style using the link in the description below. And my friends, I will see you in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.